Hey, it's Mike with PriceActionTradingSystem.com, and it is Thursday. It's April 18th. This will be our chart lesson for today. And this is going to wrap up our week. No trading at all tomorrow for the Good Friday holiday, so um, keep that in mind. Normally they'll have some abbreviated trading on those holidays, but I think the market's completely closed tomorrow, if I'm not mistaken. So you might want to verify that. But I'm pretty sure that on Good Fridays they close down permanently for the day. So it won't open back up until 5 o'clock, I think it is Central Time on Sunday evening or whatever. But anyway, we don't, you shouldn't be day trading those hours anyway. So it's my opinion that you don't want to trade before 7 a.m. That's Central Standard Time. You'll have to do the math based on your time zone, but 7 a.m. Central Standard Time in the morning, and usually cut off about 2 p.m. Central Standard Time in the afternoon. So you still get some good movement sometimes after 2 o'clock, but the problem is you just don't want to get stuck in a trade and be forced out at 3 o'clock or whatever time your broker kicks you out before the market closes, and you have to take a loss. So I just think you're better off not to enter much after 2 o'clock. So I mean, if there's something right there at the 2 o'clock hour, maybe, but 15 minutes in or something. But much past that, I mean, there's nothing wrong with managing a runner after that point if you're in profit. Just don't enter any new trades at that point. So that's just my opinion. So that served me pretty well, and I came up with that rule basically because I entered a few trades after 2 o'clock and got hung up in them, and they weren't moving or whatever, and then next thing you know, it's 3 o'clock, and my broker forces me out, and I take a loss or whatever. So um, just be careful entering after 2 o'clock. But let's talk about the trades. Talk about the day first here. Really, this is a range day. This is a big range, though. You can see the overnight lows down around 28.90, and the overnight highs up here 29.11 or so. So that's a 21 point range. That's a big, big range. So you get a nice trend up, a nice trend down, then another trend up, and this one was kind of, hey, well, this one was really uh, a relatively strong couple of moves up here. And of course, once we ran into the resistance up here. So as you can see, we're still hovering around that 2900, and you can see that's basically where this is uh, the red line is the close from yesterday. So you can see that's where we closed yesterday, right at 2900, and we closed a little higher today. So and again, this basically is going into a holiday weekend. So um, obviously there was a little bit of buying going on late afternoon here going into that holiday. So we did recover from 28.96, 94 area to 96 area, all the way up to 29.11. So, but generally that's what you'll see. You'll see prices hover around this 2900. And when we get to if we get there to 3000, you'll see the same thing, 3100. Or if we fall down to 2700 or 2600, generally when you're going down, you go through them a lot easier than you do going through them on the way up. So it just, of course, we've had some rally periods where you see it go through it pretty easily and not turn back for a while going up as well. So, but generally, you'll see a lot of action around those areas before prices either turn down or continue to march higher, so to speak. So, um, anyway, let's talk about the day. The trades here. We had the trend up, a two-tiered channel working down. Notice on this one we had an overshoot, and then of course that led to a break. And sometimes when you get an overshoot, you don't make a new low, and we didn't in this case. Also, sometimes you'll notice that on a range day, if you got a trend working down, you don't always get a retest of the low either. Uh, so that's just the way range days it happens like that. Generally, once you start going higher from here, I would look for a measured move. If it's a range day, you're probably not going to get that. But if we had continued working higher, you would be looking for that target. Basically, you just measure this right here. We didn't get anywhere close to that, but this turns out to be a range day. So, well, I shouldn't say we didn't get anywhere close, but we didn't quite get there. That's up around 29, 17, 18 area, and we only got as high as 29. I'd basically call that 29.11, 29.12. So we missed it by 6 or 7 points there, depending on. But that's the way I would look at that. But in the end, this is just a range down. We couldn't get through that resistance. We actually were testing it at the close here as well. So um, I don't know if the market's closed now for good. I don't guess it is. It looks like there's a bar forming. It probably won't close until, well, I don't know what time. I don't know if it's closed now or not. I'm actually not sure. I don't ever trade this late anyway, so it shouldn't matter. I wouldn't be trading right now anyway. You can see that's not doing anything. So even if there is any trading going on, the market's not moving. So I'm thinking we're closed all the way through. Maybe it doesn't close until after the overnight session or something though, but I'm not 100% sure. Anyway, I didn't mean to get off on that tangent because it doesn't really matter. Even though there's a lot of movement today, there's not many trades today. There just weren't a lot of good setups. Um, this is another one right here that I meant to mark green. I'll go ahead and mark that right there so I won't forget to talk about it. But there's not a lot of trades here. There was a lot of movement, but it was so fast and furious that you didn't get a chance to enter them. And so it's kind of frustrating to watch prices drop like this and you not have a chance to enter, or take off like this and you not have a chance to enter long. So, but if you're following the rules and you're trading wisely, that's just the way it works. And sometimes you just have to bite your lip and say, hey, it moved, but I didn't get a set up, so I didn't take it. And that's what separates. This is actually a good learning opportunity, because that's what separates good traders from average or bad traders, is that ability to watch prices march on in one direction without them, because they're doing the right thing. I mean, if you're scared to pull the trigger, that's one thing. But if you're not pulling the trigger because you're being patient and following the rules and looking for the proper setup, and you just don't get an entry, then you did the right thing. And it's hard for people to separate those two. And what'll happen is this market will just be marching higher and higher here, and then you say next pullback I'm going to get in, and then it pulls back and you get in and it goes just high enough and then turns and you get burned. And that's what happens to people. And just like right here, well, let me find a good example. Well, I don't really see one right off the top of my head. I don't want to spend a lot of time with that. But anyway, you get the point. You're watching it go on and on and on and on, and like right here, you decide you want to get in. I'm not letting it go on anymore, and you jump in right there, and it turns down instantly. And that's what will happen to you. Or you're coming down, and you say, right in here, I'm going to get in if it turns down again, and you get that big bearish bar, and you go short right there, and it turns up instantly, stops you out, and then turns out around and goes right where you thought it was going to go. That's what happens to you when you chase and you don't follow the rules, and you don't look for good setups, and you just get flustered, and you'll get chopped all to pieces. So if you did the right thing and you didn't get a trade, you did the right thing. So that's the only way I know to put it best. So anyway, let's back out. 7 o'clock came right in here this morning. I like this entry. It's a little bit aggressive. We didn't break lower here, so you really didn't get a failed second entry short. But notice that high and you first entry and you pull back, and there's a lower high right there. So you got a second entry right there, but your signal bar is not very good. But then it makes a lower high, and you can see it coming right off that trend line with that big bullish bar. It closed on us very high. If you could get in there, I like going long. That moved really quickly. And you notice there's a little gap. I don't know if you can see that. I don't know if it's on your chart or not. But prices, those bars don't overlap. So it closed on its high, opened on its low, and kept going and closed on its high again. A lot of times you just don't get a chance to enter that. But if you could get in that trade, I would say take it. You might have been able to drop a limit order. I don't know if you could have or not, to be honest. Your chart might have been a little bit different though, so I still want to point it out and say, hey, it's right at the borderline of being a good trade or being aggressive. But I would, at the very minimum, if we went higher there, if it starts higher, I'm going to look for a measured move like that right there. And you can see we actually went a little higher than that before it was over. So I like that one, a little bit aggressive though. And then of course we come in here and you get this is just almost a repeat pattern. Um, we don't actually break higher here, but you still get the two legs down. There's two legs there, one leg down, you up, then another leg down, and then you went higher again, and it didn't go anywhere, and it backs up, and then it gives you that bullish bar again. So it's a repeat pattern of this, and if you notice that, then I like going long right there. We've been away from the EMA a little long, but it's still in the overnight hours. That's not totally uncommon. This is, almost 8 o'clock here though. So I like entering there. Actually, if this one is really tempting, but now you're getting so close to these highs, you could probably argue for it to be green too, because that's definitely a true second entry on this level. You can see the new high, and you're pulling back first entry, and then you pull back second entry long. You just don't have a lot of room there. So, and you're a long way away from the EMA, but notice that's your first break, and usually you'll make a new high, especially on a trend that strong, and that would be your second leg up, and generally you'll get two measured legs, or at least an attempt at two measured legs. So we're probably going to push higher and try to make a new high here. So it may be worth risking. It's a little bit aggressive because we're way overdue to come back, and you see it moves up here, and it's not long before we come back to the EMA. And notice we're coming down. You get a first entry, you pull back, you get a second entry long right there. If it wasn't for that overlap right there, you could almost argue for this one to be blue. Another reason that I made it green is because we do have a break and two legs up. So is a chance that we could break higher here and turn back down. I mean, that's a pretty strong move, but it has played out. And so you would expect to almost get two legs of correction here at least before you turn down if you're going lower. So I like that one. And of course it runs up here, and then you make a first entry, and then you get a little trap, and it actually traps out people that probably went short right there, maybe looking at that as a double test of this almost. It's so close to being a doji that I'm not crazy about it, but there's reasons to consider going short right there. You're almost always better to wait on the lower high just for this very reason. And then it breaks higher, but again, you get a little trap there, and most of the shorts probably thought they were trapped at first. It turns out the people that thought they were trapping out the shorts get trapped, and it turns back down. But you do have room. It's pretty obvious it's gotten to be a range by that time, and so you've got a little bit of room to get out here. So you may take that one. Again, you're better off to wait on that lower high and skip those, because it could do that one more time, just like it did right there, to go just a little bit higher and then turn down. So those are always suspect. And if you did go short right there thinking that, it was a long trap, you had the right idea, but you were just early. There's not much you can do about it. That happens sometimes. That's why, sometimes you're better off just to forget about the failures and just, concentrate more on what's going on by, bar by bar here at this level. I mean, you can obviously see at this point right here, when we went long, it wasn't real obvious it's a range yet. It looks like a double top there, but there's still enough room. But when we turn down there again, now you got to be thinking, hey, range. So, and then it bounces here. And of course, there's not enough room to go long or short anymore in here. And that's a shame, because there's a great move down right here. And there's just not a real good way. Again, you got a little bit of you got that trap. It's almost a repeat pattern. This one didn't break higher than this one, but it's still kind of a repeat pattern. So that's a possibility. But you're really stacking up there, and there's not much room. And you see we did bounce there, but luckily you wouldn't have got stopped out. So, I mean, that's a possibility, but I just think it's really aggressive. And I would probably skip it if it were me. Otherwise, if you get in here, then you get to ride this down. If you don't get in there, you definitely better not be entering right here, because it's right into all that support. And that's just, notice how it bounced there. It still went lower. I mean, it was really hard to know that trend line was there early on, but there's a little trend working down across there too. And then it just went straight down. And I don't see any way to enter this thing. That's the closest one. It gaps, and I doubt you could have got in that one. By the time you get down here, it's just not worth entering. And then of course it bounces, and then you get another second entry here. Notice you got this little short-term trend. You get a break, new high, and it goes right off the midline EMA, and that's a fairly bearish bar, and it's the second entry short. That's at that point, it's kind of like up here. You can't really tell that's going sideways yet. If you look at it at the far right-hand corner, it just looks like a second entry short. And it does come back again. And you don't get a very good signal bar, and you're going short right into the lows. So, and that's kind of what this thing did. It goes sideways, drops, goes sideways, drops, goes sideways, drops. And so we've seen a lot of that lately. So it's kind of been the MO lately, but we do drop down. I don't see any way to get a good entry here. And then we go sideways again. And we finally get that little failed break higher and a big bearish bar. And again, the one reason I like it is because you got that trend line working all the way down. And so a lot of times they'll have to fail it out to go lower. And the problem is if this channel line, if you got this channel right, then there's not a lot of room to get out right here. And so that makes it a little suspect. But if it's probably worth taking right off the EMA there, because we could go lower. This may end up actually being the midline, and maybe there's the trend channels down here, and you might get to ride that all the way down. So it fits the rules. It's a little bit risky. I mean, I wouldn't say it's a little bit risky, but this is close to being green, I guess is what I'm trying to say. It's borderline. So there's some reasons to say, hey, I don't want to take that trade. But there's reasons to like it as well. You don't want to miss another move like this, but you don't want to break the rules to enter. And entering this, you wouldn't really be breaking the rules. It's a failed break. It's the first break of a big trend line. It's right off the EMA. It's a big bearish bar. I mean, you got a lot of reasons to like it. So anyway, then we bounce. This one is very tempting right here, and it would have worked, but notice how we pushed through the EMA or the midline right there and pulled back, and we bounce right off the EMA, which is what you want to see, right off the trend line. But I'd like to see that close on the other side, and it couldn't. Notice how it was finding resistance right at the midline there. And then it closed again inside the midline. That's not a good sign. It ends up going on, but it's not a good sign. Then it runs up here, pull back first entry, pull back, and there's a second entry long. You do get a close outside. You would expect prices to be going here at a minimum. So there's a little bit of room, and you could look at that as a failed second entry short, so that would eliminate the need for a good signal bar. It really wouldn't matter that much about the signal bar. So I went back and forth about this one, and you could almost argue for that to be green. But the real problem is I don't have this. Oh, Lord, you can't ever get it to hit the right line. I don't have this drawn across, but you can see you would have been going long right into that resistance right there. And that's just too risky in my opinion, especially with a close outside, because it may go a couple of ticks higher and then turn back down and get right back in this little range. So I'll mark it green, but it's really risky for that reason. I'd skip it most likely. And we run up here, you get your first break, you get a double top. Again, I don't like the signal bar there, or I'd like riding this one back down. It's just not a very good signal bar. And you see what happens here. This is a great signal bar, right at a key entry point, and look what happened. You get burned. I mean, you just about have to wait on a lower high. And this is that, but a double top is basically still considered a lower high. But you don't have a very good signal bar on that one. So I got to tell you to skip that one. This one is another one that's really tempting. But notice what happens. You get a close outside, and it turns back down. It actually breaks higher and turns and goes out the other side. That is very tempting, but you've got a break here. And all it's got to do is go one tick, and then it's met the criteria for a reversal, and it may reverse. It goes more than one tick, but could you get enough out of that to get out? And if you waited till that bar closed and went short one tick below it, then obviously you don't have enough room to get out. I'm not sure if there's enough room there. Otherwise, it's real close. It looks like it might be 5 or 6 ticks. So you might have gotten out if you played the brake higher, and then. But I just think it's dangerous. I mean, that's a beautiful looking signal bar and lower high, and I mean a lot. And you expect prices to try to make a new low, except the fact that you had an overshoot. So that's the one clue that says, hey, be real careful here, because we've had an overshoot, and sometimes with an overshoot, especially on a range day, if that's what we're looking at here, um, there's a good chance all it has to do is make a new low compared to this, which is 1 tick or so, and when that happens, I mean, really, basically, when this big bearish bar closed, you'd already met the criteria for a reversal, and guess what? That's exactly what happened. It reverses, and look at it go. I mean, this thing rockets up here. And again, I would measure this leg here and look for a measured leg up on that at a minimum. And again, this is one of those moves where you just don't get a chance to enter. Look at it going. And you never really get a good setup to enter until you finally get a second entry right here. Notice that new high, first entry, pull back, and then a second entry long right there. And that's a decent signal bar. There's a little bit of overlap there. The main thing though is this is a little spike and channel up. It spikes up and goes into this channel. You get a break, and you really got 2 swings up to a new high. And so you're looking at a possible reversal. So that's the reason I made that one green. Notice how we're kind of going sideways. It's underneath the EMA closing. It's just not a perfect setup. Wait and see if you get a reversal. Then it shoots up, pulls back, gives you a failed second entry short. And now you got a reversal pattern. It's above the EMA. It confirms that little short-term trend line. That's where you want to go long. That meets the rules. That works. And look at it, and it goes. So again, a lot of moves here and not a lot of trades. Very frustrating kind of day. And the key, the thing to remember here, you can chase these and they probably work. But what they'll do is they will they reinforce a bad habit or breaking the rules, and the next time you'll do it again because you'll remember it worked. Man, I caught a great move on that thing. And the next 5 or 6 times you try it, you lose, and you give all that money back you made plus some. So it's just I can't tell you how much I can't say strongly enough the importance of following the rules and being patient and not chasing trade, even though you get a big move and you see it going without you. So anyway, I hope everybody had a good trading day. I hope you had a good week, short week this week, especially for me since I had Monday off too for my doctor's appointment. But that's just a real short week for me. It seems like we just got back. But this week is over. And anyway, I think Monday is a regular trading day, so we'll be back Monday. I'm done for today. I hope you have a great Easter holiday. I hope you enjoy the day off tomorrow. And we'll see you Monday. But I'm done today. This is Mac with PriceActionTradingSystem.com. And we'll see you next time.